everybody. Good morning, good afternoon, depending on where you are. This is the All-Star Options Jam session. I am Sean McLaughlin, Options Sean on Twitter. Today is March 21st, 2024. Hope you're doing well. First day of spring. Hope it's spring-like where you are. All right, so if you're the first time here, this is the All-Star Options Jam session where we review any action in positions that we currently have on the books, anything that we've exited, anything that we've adjusted, whether it's a profit, whether it's a loss. We review all that stuff. We even have my screen freeze up for you guys. That's an extra feature. We usually charge extra for that, but for today, that's free. So I hope you enjoyed that. But before we get into any of these charts here, I got to drop the old disclaimer that everything we discuss here is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you learn something from following our process. So let's start, as we always do, at the top with the broad view. Here's the S&P 500. The breakout continues. No signs of stopping this bull market. Once we cleared that hurdle earlier this year, it's just been up and to the right, with very few pullbacks along the way, certainly very few meaningful pullbacks. And today is no exception. The market continues going higher. If you've been fighting this trend, it's been a slog. I know that there are some stocks that aren't going up anymore, but there aren't many that are going down, right? You could not be going down and also not be going up. You could be going sideways, which is equally frustrating for everybody. Meanwhile, volatility index is on its way back to the lowest levels since end of last year. So it's a market that's just keeps chugging higher, which is reflected in many of our trades, except this one. Here's the one trade that we exited this week. It's the only trade where we had to take any action this week since we last spoke. It's our position in XBI, and this was a quick in and out. This is, if we're going to lose, I'd rather lose quickly because typically if we lose quickly, we lose less because we've lost less premium in our options. So in this case, it was an XBI, which is the biotech ETF. We bought September 100 calls and shorted the September 120 calls. That's a bull call spread. We paid $6.25 for it back on March 11th, and literally 4 days later, the market had other ideas and quickly stopped us out. But you know what? We paid $6.25 to get in. We exited for almost $5, $4.93. So small loss in the grand scheme of things. When I put that trade on, a defined risk trade like that, I sized my position just in case I had to suffer the entire loss, right? If that thing went to a zero, if I could not exit that spread for any credit, if I would have lost all of it, would have been fine. I don't like that, but my position was sized in such a way that my portfolio can handle that. So the fact that I got out at 493 means I lost far less than I was willing to accept. That's a good thing, right? So we'll take those kind of losses all day long. That's the only trade that we've exited or taken any action on since this past week. The rest of the trades that we have on, we have mostly bullish positions on in our book, and they've all been not all, but they're mostly going our way. So we have a lot of positions here that we're updating our stops on. We want to keep ratcheting up our stops to, either lock in some profits or minimize the potential for losses. So let's get right to it. Republic Services. This is a position that we entered back on November 13. It just keeps chugging for us. We're long the April 165 calls, well in the money now. In a couple weeks, when we get into April expiration, then we'll start really tightening up our stop. But for now, our stop is at 180. Moving our stop to 180, as long as we stay above 180, we will continue riding Republic Services. Next up is IBM. We are long some June 170 calls we got into back in November 20th. As you can see, this position has worked very well for us. Our options, our calls are also very well in the money here. We are moving our stop up to 185 now. It doesn't show up very well in this chart, but that level also corresponds well with the 50-day moving average, which is something I like to ride when I've got a good trend underway. So 185 is our new stop loss level in IBM. As long as we stay above 185, we're going to keep this trade on. And right now, IBM is our biggest open winner. No surprise, right, considering where we got in. But it's the biggest open winner we have on the books right now. But we don't want to let too much of that get away. All right, so 185. All right, next up, Amazon. By the way, there's no particular order to these positions here. I don't like these ones that I'm talking about first any better than I like the ones I'll discuss later. It's just the way they came up as I was updating my stops. Anyway, Amazon. We're long a bull call spread. We're long the July 150 calls. We shorted the July 180 calls for a 1080 debit when we got in back on November 22nd. As you can see, this trend has gone our way. We had a nice gap in our direction, and it's held that gap. And now we're moving our stop up to 170. This too also corresponds with a 50-day moving average that I'd like to see Amazon stay above. So 170 is our current stop loss, and if we get out somewhere around 170, we'll be booking a win on this. Not sure how much that win will be. It depends on how close we are to July expiration. Okay, next up, Cloudflare, ticker NET. We got into this on November 29th. You can see here. We had a tremendous gap in our favor. I believe this was following an earnings report. We sold a portion of our position there to lock in some gains. This was in accordance with the plan that we laid out in our research piece when we got into the trade. So we're following the plan and we've locked in profits. So the worst thing we could do here, Cloudflare could go to zero tomorrow. We're still walking away a winner. Not as much of a winner as we are right now, but still a winner. But either way, 92 is now the level that we want to make sure that NET sticks to. If we lose the 92 level, then I'll look to sell the remaining part of my position. And whatever I could sell those June 100 calls for when I get out, whatever I sell those for, just adds to the profit I already have built into this trade. So that's a good position to be in. A first-class problem if we're having to get out at below 92. All right, Wells Fargo. Boy, this position has really worked well for us, and it took a couple times, man. We got stopped out a couple times before we finally got this thing to work for us. But January 29th, where we almost got stopped out again, but it has ripped our way. We're along the January 2025 60 strike calls, so we got a lot of time to expiration on this. We paid $1.75 for these. They're still out of the money, but we got a lot of time, and we're sitting in profits in this trade currently. But 52 is now our new stop loss level. Any close below 52 will invalidate my trade and tell me the trend is over, at least in the near term. And I will get out there. I see a question that came in. I'm trying to pay more attention to the chat from Nicholas. Who says, do you ever add with increasing your stop loss? I don't, Nicholas. Nothing wrong with that. There's nothing wrong with adding to winning trades if you have a process to do so. But for these trades, for All-Star options, we don't add to the trades once we're in, unless it's something that we laid out on day one. Every trade that we put out a research report that tells you why we like the setup, how we're getting into the trade, what trade structure we're using, what strategy, right? And where our stop losses and where we will take profits. We lay all that out up front. And sometimes maybe we will have a plan for adding to a position going in, but it's not something that I do later on. I don't just make a decision to, I should add to this thing as it's working. Nothing wrong with that. And there are many traders who very successfully do that. And I do that with some trades of my own. But as far as All-Star options, we try to keep things simple here. We try to make it easily manageable for anyone who likes these trades and wants to do similar trades. So we lay out the plan up front, then it's easy for you to follow along. So I hope that answers your question, Nicholas. But anyway, Wells Fargo, our stop loss is at 52. Let's move on. We got a few more. We got several more to get to here. Next up is C Limited. I wish my chart guy didn't do such a stretched out chart here. We got 7 years of data looking here. All I really care about is what's going on right now. So we're moving our stop to 47. It's not as clear why in this chart, but this is a risk reversal. We're short the June 35 puts and long the June 65 calls. We got in for a 50-cent net credit on this trade. The trade has moved our way very, very well. We're moving our stop up now to 47. That corresponds with a 50-day moving average. Again, doesn't really show well on this chart, but that's where our stop is. And if we get stopped out below 47, we'll likely still walk away with a profit, thanks to the fact that we shorted June 35 puts, and we're still in those short June 35 puts. But 47 is our exit level for C Limited. All right, next up, Nucorp, ticker NUE. We're long the January 230 calls that we paid $7 for back on February 22nd. It's been kind of an up and down ride. We almost got stopped out a couple weeks ago, but it's back up towards the high end of the range and looking like it wants more. We are moving our stop to just below the most recent lows, 182. If Nucor loses 182, that's my signal that the trend is over, at least on my time frame, and I will want out of that trade. Okay, next up, DoorDash, ticker DASH. Finally starting to break out for us. We got in on the 8th of March, so not too long ago, during this consolidation. It's starting to really go for us now. We're along the August 175 calls that we paid $4.54. I'm moving my stop to 127, which is right below the recent lows. If those recent lows get breached, then we're either early or wrong in this trade, and I want out. I don't want to stick around to find out which one it is. I would rather protect my capital. But our stop now in DoorDash is 127. All right, moving right along. We got two more here. Ego is a trade that we actually just got into very recently. Oh, wait, sorry. I got lost in my own thoughts here. I got ahead of myself. Let's talk about Valero. I'm looking at two different screens here. Valero, this is a trade we got into on the 4th on the Flow Show. Me and Straza. If you guys don't tune into our Flow Show, it's a show we do on Mondays. Not every Monday, but most Mondays, where Straza and I do a live walkthrough of finding a trade and putting the trade on, or at least discussing the trade that we want to do. And Valero is one of those. And boy, did we crush this one. At least, I don't want to jinx it. It's still an open trade, but it's performing very well for us right now. We got in on the 4th. We bought the September 175 calls for $4.50, and this thing is ripping in our favor. It's following through on breaking out from this upside resistance, almost textbook. But we are now moving our stop to 148, which corresponds with this past resistance level that we just broke. If that 148 level can't hold, then it could be a fake out breakout. Hopefully not. But for now, we're moving our stop to 148. Any close below 148 will get us out of Valero. Okay, Ego. This is the trade I was jumping ahead to. I didn't mean to. This one we just got into recently. But we're already moving our stop up to 1250. Stock is starting to move our direction. No reason to have a stop much more below 1250. In fact, this chart, we had a little issue. My chart guy had something going on today, so we had to rush through this, and I think this chart does not include today's action. That's why this looks so strange. Let me just, I'm looking at something else on my other screen here, Gene. I apologize if this is screwing something up. I just want to make sure we got the correct data. Ego is trading at 1329 at the moment. So yeah, this chart is very out of date. We're trading at 1329 right now. Anyway, we're moving our stop to 1250. We don't want Ego to get back below 1250. If it does, then then we're probably wrong. All right, Reliance Steel. This is a trade we got into 2 weeks ago, I think. This is the chart that got us in. Gene, I'm once again hopping over here to another screen. See, these were the charts that we ran out of time. My chart guy ran out of time, so he couldn't polish them up. But yeah, we're trading at 331 now at Reliance Steel. So this is just the chart when we got in. This is why we liked it. But it is following through now, breaking out. We're at 331 and change at this very moment as I'm talking. Our stop now is at 315, which corresponds with the low of this consolidation. If we trade, if we're trading in the 330s right now and we roll back below that, then it feels like a fake out, and we're probably wrong, so we will want out. But the new stop in Reliance Steel is 315. Okay, that's it with the janky charts. Some of those last charts, I gotta talk to Fonzie about getting those right next time. My bad. But all right, so these next trades here, these are trades that we've put on in All Star Options over the past week. For those of you who are subscribers, you have access to all these trade plans. Just go to allstarcharts.com, go to the members section, go to the options section. You will see the detailed trading plans of why we like these setups, how we're playing them, where our stop loss levels are, where we're taking profits, and anything else of note that we need to know to manage the trade going forward. If you don't have access to that, what are you waiting for? Come hang out with us. Shoot us an email at info@allstarcharts.com. We'll get you access, and you'll have access to our live chat room where all of our subscribers can hang out and share ideas and engage with me and see what we're looking at. So here's that ego chart again, the janky ego chart, because we just got into this trade this week. And this is what it looked like when we got in. We are currently higher. Same with Reliance Steel, a trade that we recently got in. And then AOS. That's a trade we got into yesterday. This is a ticker I've never even heard of before. We talked about it in the morning show this morning too. It's a stock I never heard of. They're based in the Midwest. But boy, do I love this setup. Boy, do I love cheap options premium. And I love that nobody knows who this company is, or at least very few. So we're in AOS. Again, all the trade plans are available on the website, allstarcharts.com/options. No, just go to allstarcharts.com. You'll find it. Oh, another trade we got into is RSG. I don't know why we don't have a chart for that. I apologize. RSG, which is, what's that ticker? RSG. Oh yeah, Republic Services. Oh, sorry. My bad. I'm so confused today because we got everything else screwed up. RSG's not a new trade. My bad. Forget I even said that. I wish this wasn't live, Gene. We could go back and edit my gaffes here. But anyway, that's all I got for you, folks. Thanks for tuning in. We'll have it better dialed in next week. As always, if you have any questions, shoot us an email, info@allstarcharts.com. Follow me on Twitter. I'm Options Sean, if you don't know that already. Hey, today's the kickoff of March Madness. If you're a basketball fan, even if you're not a basketball fan and you like gambling or you like brackets or whatever, starts today. Next 4 days is going to be pretty exciting around my house. My 9-year-old son loves the tournament, so we'll be watching. We'll be filling out our brackets, doing all that fun stuff. So have a great weekend, everybody. We'll be back doing this again next week. Until then, I'll see you on the morning show. Tune in the mornings, 8:30 to 10 Eastern. Take care. We'll see you then.